So I'm going to continue on last week, where we went over how to approach pricing, and how to prepare people for price adjustments. Okay. So I'm going to do a recap of that. And then after I'm done doing a recap of that, I'm going to go into how to actually present the comparative market analysis. So when it comes to comparative market analysis, it's really how you present it, the verbiage you use to kind of ease into it. And the verbiage we always start with is you want to explain to them what a comparative market analysis is. You say, hey, I'm about to show you a CMA, a comparative market analysis. And then you explain there's typically two parts of the comparative market analysis. The first are the actives in your area, and the second are your solds in the area. Now, the actives is what I like to call fantasy land. And that's because you have no idea if those properties are priced properly because they haven't sold yet. You don't know if there's any deficiencies with the home because they haven't sold yet. They haven't gone through an inspection. They haven't gone through an appraisal. They haven't gone through financing. Therefore, they are not the best comparables. However, it's important for you guys to know what your competition is, because we don't want to be priced above our competition if the competition, potentially has more value. So that's how you present the actives. Then you say, now we can go on to the solds. And the solds is what I like to call reality. Okay. There's most likely been financing done on it, of course. Same with the home inspection. So we know that even with deficiencies, that the price has been negotiated with those in mind. Okay. We know that they have closed. We know that they are sold. That is what I like to call reality. And those are the properties that we're going to be focusing on here today. So you let them know. Now they're like, okay, I get it. And the reason that's important to mention is because when you talk to somebody about the price of their home, I want to say like 90% of the time, they're basing the value on the properties that they are seeing go up for sale, not the properties that have actually sold. And that's typically why people think that their house is worth more than it is, because they see all these houses going up around their area. They're going up for 800,000, but really they're selling for 750. So people have a false sense of security when it comes to the value of their home. And there's other factors, of course, their neighbors, what people think that, what people are telling them. Their neighbors are always going to tell them that their home is worth more than it is, because they don't want you to list the house too low, because then that's going to determine the value of that neighbor's home. So they're going to be listening to neighbors. They're going to be looking at actives around the area. And that's one of the reasons, before I go into a listing appointment, the day before, I have a pre-qualification script. And part of that pre-qualification script, and actually I'll pull it up for you guys so you can see it. I'm going to jump around a little bit here, but it'll give you guys some little tidbits from everything. Everyone always seems to forget pre-qualifying people before they walk into the house. Just going to share my screen here. Now, it's important about, can you guys see my screen? You guys see my screen?
Yeah.
Okay. You do this phone call. So the steps to a listing: set up the appointment. After you set up the appointment, you send them a pre-qualification package. That's step 2. Step 3, the day before you call using the script. Step 4 is you actually go to the listing. It's a 4-step process. Remember, a listing, 4 steps. Listing, 4 steps. I talk to a seller, I'm thinking to myself, a 4-step process. Okay, that's what they're going to be seeing. So ring, ring. Hey, Mr. Seller, Steve Alexopoulos here. Super excited to meet you guys tomorrow at 6 p.m. I'll be coming by about 10 minutes early. Hey, I just got a couple of questions before I come by. You got a minute? Yeah. So I just, and remember, if you know the answers to some of these questions, the way, I'll show you how to ask them if you already know the answer. So for example, let's say you forgot to mention with them where they're moving to. So, hey, so tell me again, where are you moving to? Hey, I'm moving to Toronto. Okay. Let's say you already know. Okay. So hey, just want to make sure. So you're moving to Toronto, correct? Yes. Okay. So you're also going to be buying in Toronto. I remember sending you over that agent from Toronto. That's a referral partner. He's going to take super good care of you. Just want to confirm that, you've had a chance to reach out to him. Yes. Awesome. Hey, so just quickly again, what's the reason for the move? We need to move to Toronto for work, blah, 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 blah. If you already know the answer, say, hey, just want to confirm you're moving there for work, correct? Yes. Now, why am I asking these questions if some of them I already know the answer to? And the answer to that is it shows that you were listening during the first call. It shows that you're sharp. It shows that you were taking notes. So you're just trying to confirm with them, or you're just reiterating the fact that you were listening to everything they were saying on the last call. Okay. Now, here's an important question that I'm pretty sure you probably didn't ask. So what are you looking to achieve in terms of sale price? And this is such an important question. It's honestly one of the most important questions because you want to see how realistic they are. If they tell you something like $300,000 above what they thought, then you might have a bit of a problem. However, you're going to be proving it to them with the comparables that you're showing them. Anyways, regardless, what are you looking to achieve in terms of sale price? Looking to achieve 800,000. Okay, great. You want to take it a step further. Where did you figure out that price? Did you have an appraisal? Was it neighbors? Houses for sale that you saw? A lot of the houses we saw that came up for sale. Okay, great. Can you please describe your home to me? Yeah, it's a single house. It's about 3,000 square feet. It's got 4 beds upstairs. It's got 1 bedroom downstairs with a finished basement. It's got a pool in the back. It's got a pretty big lot. Yada, 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 yada. So you're just getting them to describe everything. Now, another very important question. What upgrades have been done? What's the age of the roof? What's the age of the furnace? The AC. You want to have these answers before you go to the house. Those are always good things to know because it's going to help you when you're doing your CMA to determine value. These are big ticket items. You got like $10,000 for a roof. You got minimum. You got the furnace, $4,000 or $5,000 these days. I remember when they were like $1,500, $2,000, but prices have gone up. So these are all big ticket items, right? Another very important question. Will everyone on title be present? Yes. If not, everyone will be on title. If everyone isn't present on title, you have a big, big problem. You have yourself a wasted visit because when you go to the house, if you present to the husband, let's say, for example, and he's into it, but his out will be, oh, my wife's not here. She has to sign too. And then you're screwed. And then you just wasted a visit. So super, super, super important question. Will everyone on title be present? If you already sent the package, which you should have, did you have a few moments to review the package that I sent you? Yes. Are you planning on interviewing more than one agent for the process of selling your home? Now you know if you're going to need to be if you're going to have to handle the objection of them interviewing another agent. This is important to know. Last and most important question. If the numbers work and you're confident with our marketing initiatives, would you have us list your home and handle the marketing and exposure of the property? Why is this important? Because it's the pre-close. You want to make sure that they're ready to pull the trigger. Okay. Typically, and if they say yeah, like you're in really good shape now. Because now you're going in there with the freaking harpoon and you're going to close them. Okay. Just want to make sure this is recording. Okay. Did everybody get that? Give me a hands up or something.
Quick question. So for the part about
Yeah.
title, so say, like you said, you're meeting with the husband and he decides that, his wife's not around, would you just reschedule? Like, would you do it without?
Yep. I would reschedule. My time is valuable. So, and I mean, so is yours, and so is everyone's time. So you want to make sure that everyone's there so that you can get everything signed then and there. Why that's important. And this happens through experience. I can't count the amount of times early on in my career where I went to a house, I was super excited to get a listing. I missed all this stuff. And then they tell me, oh, my wife's not here. Can you come back another day to show my wife? Now they might say, oh no, my wife's not here. But you can still come by. I would say, it's super important that everyone on title is on present because I'm going to be going through a lot of very important information, a lot of valuable information for you guys. And I want to make sure everyone's there. So I don't have to end up doing it twice. It's very, very important that she's there. Just tell them straight up, like, I'm going to be going over a lot of important information. It's important that everyone listens in that's on title. You don't tell them that, because I'm going to sign you, everyone needs to be there. But yeah, I wouldn't go. But again, during the initial setup of the appointment, one of the questions you should be asking is, will everyone on title be present? Or are you the only one on title? Oh no, my wife's on title. Okay, great. When I come by on Wednesday, is she going to be there? Yes. Great. So it's like you're just reiterating it, and the reason you're reiterating is even if they say yes in the first call, maybe they forgot or something, but you just want to reiterate it again. And I just want to make sure that everyone on title is present. Okay. Ultra important. Okay, so now you show up, 3 steps, 3 gears of selling I always talk about. Gear 1 is the warm up and asking questions about the house. Gear 2 is the presentation, and gear 3 is the close. So we've gone through, let's say now we fast forward through gear 1, asking all the questions about the house, asking questions about them. Now gear 2 is the presentation. So just to reiterate, I'm going to do it quickly. Call them up the day before. Hey, so just want to make sure you're still moving to Toronto. That's correct? Yes. And I guess you're looking to buy there as well. I put you in touch with a referral partner in Toronto. Have you had a chance to speak with them? Yes. Ideally, when do you want to be there? I want to be there in the next 2 months. Perfect. And again, what's the reason for the move? Oh yeah, we need to move over to Toronto because we got work there. Great. Hey, what are you looking to achieve in terms of sale price? We think it's about $800,000. Okay, is that because you saw some comparables, you saw maybe some actives in the area? Was it some neighbors? Oh yeah, one of my neighbors said they thought it was 800,000. Okay, great. Would you please describe your home to me? Yeah, single house, 2 stories, yada yada yada, 3,000 square feet, blah 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 blah. Okay. What upgrades have been done? roof of furnace, age of roof, AC. Will everyone on title be present? Yes, perfect. I sent over a package of information the last time. Did you have a chance to take a look at it? Yes. I plan to interview more than one agent for the job of selling your house. Yeah, we got one more person coming in. Okay, great. When are they coming in? They're coming in 2 days before you, 2 days after you, whatever. If the numbers work and you're confident with the marketing initiatives, would you have us list your home and handle the marketing exposure property? Yeah. If everything works out, yeah, for sure. We definitely want to sell a house. Perfect. Get to the house. This is just me going over the gear one. We're gaining information about the house, getting information about them. Sit down, presentation, listing presentation, go over your marketing. Marketing's done. Now, go over the price. Go over the price. I'm just going to share my screen here. The way you started. Pricing your home for maximum value. I start right off like this. So I say, hey, I'm going to be talking about price. Before I get into the price of your home, I want to talk about pricing strategies and what to do and what not to do. Okay. So let's start by this. How can the correct price attract buyers? So the price of your home is like a magnet. See this blue line right here? This blue line represents the market value of your house. The list price of your house is these little magnets, okay? You notice how the closer the list price is to the market value, the more buyers that are being attracted. That's because the price of your home is like a magnet. The closer you are to market value, it will reach the point where it attracts more buyers and produces a sale, which will net you more money. Does that make sense? Yes. Now, by overpricing your home in anticipation of a low offer, you harm your own marketing efforts by appealing to the wrong buyers. So, a lot of people will ask me the question, they'll say, why don't we just price it higher in hopes of getting a lower offer? And the reason is that just doesn't happen. And actually, I mentioned this to somebody yesterday. He said, can we list it higher and hope somebody, puts in a lower offer? And I said, no. And I said, the reason is buyers will bounce off your property into a properly priced home instead and put an offer on that home. If your house is overpriced, they're not just going to shoot you a lowball offer. They're going to find one that has better value with regard to price, and they're going to put an offer in on that house instead. That's how real estate works. Okay. If your house is overpriced, it makes the other homes look better, and it will help the competing homes, and it will be bad for your home. Another question I get a lot is, hey, can we try, we price it high for, a couple of weeks? The answer is that's a bad idea. The first 2 to 3 weeks is where the majority of the activity happens, and then it starts to taper off. So don't overprice your home during the period of highest activity, only to lower the price after the buyers are gone. Price it right during the initial phase of exposure to capture the best buyers. So now that's done. So you explained why not to overprice the home. You explained why you need to price it close to market value to attract all the buyers like a magnet, right? And so now they know, okay, we can't overprice the home. And you see, now that we've gone over strategy of pricing, what I'm going to do is I'm going to show you what we call a CMA, a comparative market analysis. There's 2 parts to the comparative market analysis. There's the actives and there's the solds. Actives is what I like to call fantasy land because we don't know if the house is overpriced. It could be overpriced. We don't know. There could be deficiencies to the home since, there hasn't been a home inspection on it. We don't know if the home's overpriced because there also hasn't been an appraisal and financing hasn't gone through. So those are not the best comparables. However, I'm going to show you a few just so we understand the competition that we're up against. Okay. Second part to the comparative market analysis, the CMA, are the solds. Solds is what I like to call reality. And the reason it's reality is because they have already been sold firm. They've likely gone through a home inspection. They've likely gone through a financing process. And those are what we like to use for comparables. And that's what we're going to be focusing on today. Sound fair enough? Yes. Great. Now, I'm just going to do like a quick mock CMA. I'm going to share my screen here. Okay. So there's 3 ways to determine the price. Okay. There's 3 things you need to search for. Now, before, hey, Andrea, are you able to search the model name anymore?
I don't think so.
No.
No.
So when I first did this presentation, I did 3 things. The first one, I would search the district and the model. Why? Because that is the absolute best comparable. If you have the same district and the same model of house, you're likely not going to find a better comparable than that. The issue is because MLS changed, we don't have that option anymore, which is ridiculous. So the second one was the street name. So let's say, let's pull up a street, Herschel. So the first things that I'll do is I'll look up properties that have sold on the street. Now, if I can find properties on the street that are, let's say, 4 beds, 3 baths, finished basement, around the same size, those are pretty damn good comparables. Okay. So I look for those, I guess, in this case, first. What has sold on the street? What if it's obviously, obviously needs to have all the same criteria. It can't be like, you can't be looking up a townhouse when the house you're going to is a single family home, right? So you got model, street name. Then after that, you go to residential. I'm going to go detached, 2-story. Ottawa. Let's go Canada. Let's go Bridalwood, since I'm in Bridalwood right now. Okay. Sold. Let's go since February 1st, okay? Four beds of upgrade. Let's cut this down a bit. I usually typically like to look within the last 3 months, but it's going to depend on a few things. Okay. Garage. 2 garage. So when I look up results, now I have 1, 2, 3, 4, 5, 6, 7 actives. And I have 1, 2, 3, 4, 5, 6, 7, 8, 9 solds. Okay. One of the first things I do, just to make sure that I don't forget, I click this button right here. Okay. It highlights everything for me. And I go to quick CMA. Why do I go to quick CMA? Because it's going to tell me the average price. It's also going to show me median days on market is 31. Now, why is that important? The reason it's important is because when you talk to them, you want to mention the average days on market. So the average days on market is exactly 1 month in this case. So you let them know beforehand. I just want to let you know, based on all these comparables, the average days on market for this kind of home in this district over the last 3 months is 31 days. And the reason I'm getting to that is because typically, if you don't have an offer before those average days on market, it's important that you change the marketing strategy with regards to a price adjustment. Okay. So you're letting them know, like, typically this house lasts on the market with OREB for about a month. Our stats are lower. However, we want to go with what the market average is. Okay. So this number right here is important because it's going to, it's going to give them, like, because you're going to be telling them that if we don't have an offer before this period, we're going to have to look at adjusting the price, typically at week 3, right before that ends. So now when I go through the market analysis, I show them a couple of the active properties first. I don't put as much detail into the active properties, but I show them a couple just so you know what we're dealing with. Now, I'll show them about 3 solds. I don't do more than 3. And the reason I don't do more than 3 is because it just starts confusing people after a while. You want to make sure that you want to show them the 3 best ones. So here's how I do it. And I print them out. And the reason I print them out and I don't do it on a laptop is because I like circle everything. I want them to see it. If it's on a screen and you're not circling and you're not keeping them engaged, it's not going to work as well. So I say, hey, we got this sold, 230 Equestrian Drive. It was listed at $799 and it sold for $725. Okay. It actually sold May 1st. So, just about a month and a half ago. So this is a very good comparable. It has, and then you go over how many beds it has, how many baths it has. This one has an unfinished basement, just like yours. Let's say theirs is unfinished. Okay. You go over absolutely everything. I always look in the client remarks. I look for things like, updated kitchen. I look for things like, updated bathrooms. Okay. I look for absolutely everything. And before I get to the listing presentation, I'm underlining things, I'm circling them. I have everything ready to go. And I put notes beside kitchen updated, for example. I'll write bathrooms updated, newer furnace. Like if some of these items aren't mentioned, like I'll call the agent and I'll get as much information about the property as possible. And the reason I'm doing that is because I'm trying to build a case. The mistake that most people make with CMAs is they just like name the price. Oh, and this one sold for this, and this one sold for this, this one sold for that. Okay, I think your house is worth $750. That's not how it works. You go over every single detail about the house. If the details aren't there, you call the listing agent to get the details. Okay. and you write them all in notes beside this sheet right here. You also want to print out the photos. Okay, so for example, let's say for this one here, and I'm just hypothetically speaking here, okay, it's got updated kitchen, updated bathroom, unfinished basement, it's got 4 beds just like yours. And I go over every detail, I talk about every detail, I talk about the lot size, absolutely every detail you can absolutely imagine, okay? I paint the picture for them, I let them look over the pictures in detail. I say, take a look at these pictures of what the house looks like inside. And I start mentioning all the details of the house. And then I ask them the magical question. I don't show them, sorry, I mentioned the price at the beginning. I don't show them the price yet. I keep the price covered. Sorry, I forgot to mention that. And I ask them the question. Do you think your home would sell more or less than this home? Before I show them the price. Remember, put all the notes down about the house, go over all the notes, let them look at the pictures, go over every detail, number of baths, number of bedrooms, garage, size if it's there, finished basement, lot size, area, upgrades. Mention all of them. Let them look at the pictures. And then you ask them, do you think your property would sell more above or under this one with regard to price? I think mine would sell a little bit more than this one. Okay, great. Well, the sold price is $725,000. Okay. And I also asked them, why do you think so? Oh, you know, mine looks a little bigger. The kitchen's nicer. The layout's better, blah, 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 whatever it might be. I think mine would sell a bit more than this one. Okay, great. This one sold for $725,000. So now I have my first, it's like you're a detective, but they're the ones that are figuring it out, not you. And then you show them another one. This one here. Can I already tell this one here has a way bigger lot because it's got 100-foot depth, 54 feet in terms of frontage. And I go over everything again. I go over the bedrooms, bathrooms, size, go over upgrades, everything. Show them the pictures. Take notes before you get there. Like you need to be as prepared as possible. Okay. You go over everything. And then at the end, you ask them, remember, you haven't gone over the price. You know, this one sold in March, mid-March. Do you think your property would sell more or less than this one? Oh, for sure. This one's it's bigger. It's got a bigger lot, blah, blah, blah. I don't think mine would sell for as high as this one. Okay, great. Well, this one sold for $795,000. Okay. Now the math is starting to go on in your head and in their head. I mean, you probably already know what the price is going to be, but it doesn't matter what you think the price is. They need to believe what the price is. You need to convince them. And the best way to convince somebody is for them to convince themselves based on the data that you show them. So now they're saying, okay, yeah, I don't think mine would sell as high as this one. Okay, great. Well, this one sold for $795,000. First one above, $725,000. Next one, $795,000 below. So now you might be thinking, okay, maybe it's $750,000, like, you know. So you show them one more. This one here. Go over everything once again. This is the third one. Again, bathrooms, et cetera, et cetera, et cetera. Every detail you possibly can. Show them the pictures, go over all the upgrades, everything. Do you think your home would sell more or less than this one? This one's pretty similar. You know, I think it would probably sell pretty close to this one, I think. And then you showed them the price. Well, this one sold for $752. Now you got a pretty good baseline. Now, obviously, they're not all going to work out as well as this one's working out. But if you can really get good at this and do it the same time every single time, you're going to get very, very good at it. This one sold for $752. Seems to be similar. The other ones were lower. The other one was higher. So you're looking around maybe the 750 mark now, approximately. Now, based on your due diligence now, you can compare them all. And you can say, you know, based on this, I think we're looking at, you know, a list price of approximately, and I would say 750 to 760. Now you got the price. Does anybody have any questions on that?
I like that you go over it in so much detail. I feel like sometimes I rush a little bit. Like I just go through like the main points. But
Yeah.
I can see like taking, an extra 10, 15 minutes to like really go over the details. And also asking them to compare it like in terms of price before showing them the price.
Yeah. Yeah, you don't even show, I mean, they won't be able to see the price anyways because of how small it's written. And they don't know where to look for it.
No, now you can see it on the top right corner, so it's a little bit more visible. It used to be just the bottom.
Yeah, I mean, you can cover it. But
Yeah, I'm
don't show them
thinking.
the price until
Yeah, because
don't show them the price until you've gone over all the details and you ask them the question, do you think your property would sell more or less than this one?
yeah, I think I'll just cover it with a sticky note.
Yeah, that's what most people do.
Hmm.
I've been doing it this way forever, and I'll tell you this, the listing presentation is very important when you go over the marketing. But let's get real here. The house is going to sell based on the price. You can have the best marketing in the entire world, okay? But if you price the home overpriced, it's just not going to sell. So the skill of determining price and getting them to get on board with that price is potentially the single most important thing you're going to do in real estate. Because remember, people always seem to think their house is worth more than it is, but you can't argue with facts. And if they agree, for example, that their house is worth less than a house that sold for 790 and they originally thought it was 790, you just changed their mind. And you changed their mind not by telling them you're wrong. They essentially just admitted that they're wrong. And that's okay. But you need to get them to agree because, you know, people believe what they see, not what they hear. And I say that all the time. But you're no longer the bad guy. Okay. If you told them a price earlier, and that's why, like, I don't really get into price before I come to see the property because a lot of mistakes that agents make is let's say they think the house is worth 800 and on the phone you're like, no, it's not worth 800, it's worth 750. A lot of people do that and then you're screwing yourself. You need to convince them and you need them to convince themselves before you ever get into the discussion of price. Same thing with commission. You don't want to negotiate commission before you've gone to see the house and build rapport. So until you've seen them, you've built rapport, don't talk about price, don't talk about commission. And you know, they can say, hey, what do you think the price is? Hey, totally understand you want to know what the price is. However, I haven't even seen the property yet. And for me to get a really, really good idea of the price, I'll have to walk the property and ask you some questions. Because it's impossible to determine the price unless I've actually been to the home. So I'm looking forward to seeing you tomorrow at 3, and then we can go over price. Does that sound fair enough? Yes. What's your commission? Hey, great question. I haven't even seen the property yet, so I don't know exactly what we're going to do for commission. However, the good news is that commission in Ontario is negotiable, and we can discuss something that works out for both of us when I'm there. Does that sound fair enough? Yes. I don't talk about it until I see them. I don't go over numbers until I've seen them. I don't go over numbers. And the reason for that is like, they don't know what the marketing we do. They don't know anything. So like, if you get into a freaking numbers war before you've met somebody over the phone, you're going to lose every time. And you're not in the business of losing, you're in the business of winning. So you want to make sure that you're at the house before you ever talk about numbers, period. Anybody have questions on that? And again, going over the quick CMA. So now you determine the price. Just want you to know for this type of property, the average days on market is 31 days. So I just want to reiterate, we're not battling just the market, we're battling the average days on market. If we don't have any offers within those days, we may have to look at making a minor adjustment with regard to marketing or price. Okay, just letting you know up front. Let them know up front. Chat. Somebody would, somebody right. You may be able to put model name in the rep remarks and public remarks section and cross your fingers. Yeah, sometimes it'll work now. Okay. Now, now you get it signed, okay? Price is so freaking important, guys. And then after you're done telling the price, you got everything signed. Hey, just want to let you know, typically in real estate, there's 3 things that can happen. We get a lot of showings and no offers. Sorry, we get a lot of showings and we get offers, which is what I think is going to happen. And that means we priced it perfectly. Sometimes, however, you can get a lot of showings and no offers, which might mean we have to make a small price adjustment. Then the third one, which I don't think is going to happen because I think we're pricing it pretty well, is you go on the market, you get absolutely no traffic, and that means you're totally missing the mark on price, but that's not what's going to happen here. So, if we do miss the mark on price a little bit, we'd have to work on adjusting the price. So we don't want to remember, in the slide before, if the house on the market for too long, you run the risk of having a still listing. Okay. The average days on market is 31 days. So that's something that we really need to pay attention to. So let them know 31 days, something we have to pay attention to. 31 days, something we have to pay attention to. Because on week 3, and this is going off of what my topic was, but I just want to paint it all in a nutshell. If on week 3, there hasn't been an offer, hey, Mr. Seller, I'm calling you to give you the weekly update I always call to give you. One of the things we talked about when we first listed the property is that we're not just necessarily competing with other homes, but we're also competing with their days on market. Okay. So today we're at day 21, and I mentioned to you the average days on market was 31. Or let's say, okay, let's use this example right here. So today we're on day 30, and as I mentioned to you, the average days on market was 31. Therefore, we've been on the market exactly at the average. And if you remember what we talked about when we sat down the first time, we're on the market any longer than that, it could mean a few things. Do you remember that conversation? Yeah, I remember you said we might have to slightly adjust. Okay, great. What we want to do to avoid becoming stale, and again, becoming stale has happened when it sits on the market too long. That's when lowball offers might start to come in. So that's the last thing we want. So let's go ahead and adjust the price to, I don't know, 725, so we can start appealing to a brand new set of buyers. Wouldn't you guys agree with that? Yeah. So what I'm going to do is I'm going to make the change today. What we're going to do is cancel the list to the new price. It's going to get resent to all the buyers, including the new buyers that are looking at that price. And we're going to continue to move forward. Sound fair enough? I'll get that paperwork sent to you today. So this is your masterclass in price. Price is the most important thing in real estate. It's more important than the marketing. It's more important than anything. If it's not priced properly, it will not sell. If you price it properly, it will sell. So people like they don't put enough emphasis into price, and they don't research the price enough. Like when you're showing them these comparables, you need to have a shit ton of notes on that page about the house. The more notes you have, the more data you have about the property, the more educated you can make the sellers. The more educated the sellers are, the better chance you have of getting the right price. The mistake people make is they don't prepare enough when it comes to the price. And that means they don't have a compelling argument of why it should be this price. You need to let them know why pricing it too high is bad. Why is it too bad? Well, it becomes stale if it's been on the market for too long. It's not going to attract the right kind of buyers because we're too far away from the market value, and that magnet doesn't attract the buyers. Like, you need to educate them. People don't know this stuff. You guys do it every day, but they do not do it every day. They don't understand. So you need to make them understand. You need to make them understand the reasons why pricing it too high is bad. And then you have to have a compelling argument of the factors of the house and what that's going to, you want to have as many arguments as possible on why it shouldn't be higher than that house. And then they determine for you. It's so simple. It's like it flows really, really well. But you have to be able to, you need a compelling argument. Once you have that compelling argument, which is all the different, upgrades of the house, the size, et cetera, et cetera, et cetera, then you can get them to determine the price. And when they determine the price, it makes things a lot easier for you, because then you're not battling each other, right? You're just convincing them. But the mistake people make is they don't have a compelling argument because they didn't prepare enough and they didn't educate enough. So you have to educate them. You got to be prepared. You have to have a compelling argument. Does anybody have any questions on that?
No questions for now, but thank you.
So that's price in a nutshell, guys. I went over it last week, but it's so freaking important that you guys understand how properties are priced, because right now, especially going into the summer, if it's not priced properly, it ain't selling. So make sure you price it properly off the start. It's the single most important thing you need to know. And that's it, guys.
Thank you, Steve.
Thank you, Steve.
Thanks, Steve.